Hey traders, this is Chris Buss with Traders Profit Compass. In this video, I want to do something a little bit different. I want to do a more or less candle by candle analysis of Friday's price action and active trading sequence. I think it might be helpful to those that are active traders trying to trade short time frames. So here we go. I'm going to go over the SPY 15-minute, QQQ, IWM, and Apple 15-minute charts from Friday, July 31st. To be frank, this is a day, or was a day, that active traders wait for, dream about, plan for, whatever you want to call it. You should have done very well on Friday if you're an active trader. If you didn't, what's done is done. Let's learn from it. So taking it from the top. If you read the pre-market note in the strategy section, we talked about having our eye on a fade. We talked about fades in the fangs with the huge gaps below. We talked about fades on the indexes because price was at the top of the range. There wasn't a huge amount of upside to be gained. We were open to it, but our bias was to look for a fade. And we also talked about end of the week, weekly options that were more or less lottery tickets, that if we got in and we got that unidirectional move, they would pay very well. So we had a pre-market idea. Those pre-market ideas don't always work. The market's going to do what it wants to do, but at least you had a plan. And within that plan, we were open to a move higher, but we were looking for a move lower. So let's take it from the top. SPY. We have an open gap from 327 to 329. We knew that in prior trading, price had a hard time taking out 327. We knew that price had gapped higher in the pre-market and would open somewhere around 326. Okay, we're waiting there. This is a 15-minute candle. If you got in, like immediately, great. Where would you have put your stop? I'm going through candle by candle, and I'm following the methodology in the video that I presented on how to set stops and take profits. So you're Joe Day Trader, you were looking for a fade, you got a little pop, and you set your stop just above your entry. Okay? You get a big move down. Great. We also said in that prior video, what's the point of any trade? To stay in a winning trade as long as possible. That's your objective. Okay, we get a move down. We get a bounce up to this 50% retracement level. And then we go down and we break the prior low. Time to move our stop to the swing high just above it. Now, if you were a bit tentative, I'm going to make that thicker. If you were a bit tentative and you missed this big plunge down, stay calm. Look for that 50% halfback move short entry. You got it. Perfect bounce to 50%. I've got the fibs here. I've got the 50% line here at 325. It got up to it, did not take it out. If you weren't in, you could have got in right there and set your stop just above. Okay, so you either got in here and move your stop down, or you got in here and that was your first entry. Great. Price moves down. Price moves down again. You're not worried, you're not guessing. Price bounces. Comes up here to resistance, which is the bottom of the gap, 324. Makes a little push above. You got 3 candle wicks higher. Price fades. Price fades some more. Takes out the lows. Time to move. Oops. Time to move your stop. Okay. Price bounces. Puts in a baby. Swing high. You move your stop down. Now, at this point, in your own pre-market work, if you were going to trade SPY, you knew that 321 and a half had been a place where price had found support. If you identified that pre-market and you got that move, that was a place to be out. Okay? Be that as it may, let's say you stayed in. Okay? And you thought it was going to break below 321 and a half, but you had your stop. Price comes down, makes another push. Higher low. Next candle takes you out. So you made, whoever got in here went from 326 to 323, made $3 and they were out. Anybody who got in here at 325 made $2 and they were out. Okay, you're out. Let's go the other way now. What do we always say? When price breaks into a trading range and then recaptures a key level, we've had 323 on the board for 2 weeks. Price recaptured that level. If you were short and you got stopped out and you saw price recapture that level, that was a place to get long. And you had to be quick. You couldn't just let it go. You had to be fluid and flexible. Not mad that you got stopped out. You could have got long and placed a stop just below 323 and looking for a move higher. When it crossed this key level here at 324 back into the gap, the prior gap range, you could have raised your stop here, said okay, we broke into a prior range, I'm going to move up, and then honestly for the rest of the day there was no reason to get out. If you were buying weekly options, you would have gotten out. But price never gave you any worries on the upside. It went straight up. So if you had bought anything. I mean, literally anything. If you bought 323 for the end of the day, or 324 or 325, all those would have paid. And price never gave you a reason to close out. So you could have held those until 4 o'clock. Of course, you didn't know all this was going to happen, so you could have taken profits at any time on your weekly options. All I'm saying is, from a day trading perspective, from an active trader perspective, there were plenty of places to get in, and with objective ways to set your stop, where if price reversed, you would have been taken out of the trade. So you stayed in as long as possible on the short side. You were fluid and flexible and got long when the evidence and price showed you on the recapture of that 323. Even if you missed 323, when it moved back into this 324 range, you could have gotten long there as well. That was very objective. And then price went on to rocket higher into the close. Okay, so let's move on to the Qs. Same idea. We were looking for a fade. Okay, we got it. Price never gave us a reason to get long. If you're Joe day trader and you got in right at the open, great. Perfect entry. You got a big move down, and then you got a little kickback, and then the next bar broke the low. That's your cue to move your stop down. Okay? We had set up here in the notes 261, full back gap fill, logical place to close any shorts and flip long. So that was in the notes. You got a full fill right here. If you had been long, that was a pre-identified place to get out. If you got in on the first candle, you made close to $5 in an hour. 4 candles. 1, 2, 3, 4. It filled the gap. $4 in 1 hour. Okay. You're out. Now you wait. Maybe you went long right here on the bottom. Maybe you never got in. Let's keep going. I'm going to throw some fibs up here. Again, you got a nice half back entry right here. Price kicked back 50% of the move. Gave you 3 bars, 3 topping tails, where you could have entered short. Let me move this over here. Let's say you did that. Placing your stop just above your entry, and you got to push down again to this 261 level where there was support. Did a little double bottom. That was a place to get that you could have gotten out. But let's say you didn't. let's say you thought it was going to break the low and come down here to this 259 level, which was another important place on the chart. Okay. There's your initial entry. You're short, you're short, you're short. Price comes back to put in a little swing high. Price comes back down. You have an opportunity to move your stop down to the swing high. You didn't get the breakdown. Price reversed and took you out at 262.5. You made $1.50. You were probably disappointed you didn't get out here or didn't get out here, but you know what? That's trading. Looking back the other way, we had 263.5 as an important level going way back. That also coincides with 50%, basically 50% of this move. If you were nimble and were inclined to do it, you could have gotten long on that break above and set your stop there and took a shot with 263.5 calls, whatever, and you got the push higher. You never came back to threaten your stop. You could have stayed long and taken profits any point along the way into the close. So, I mean, this here was a textbook gap backfill. That's all it did. It opened at the high, set the high of the range, gave an immediate backfill, bounced, retested it again. I mean, that's right out of the textbooks. It gave you two chances to get in, to either here capture the full amount or here capture 50% of that move. And once it bottomed, you could have entered down here and say, you know what, it filled the gap, back tested the gap, came back again, couldn't get there, could have gotten long against 261 and make price prove that that it could take out 261 and push down to 259. Okay, let's look at IWM. This is the one I was involved in. I did have a trade on QQQ. I was not in SPY. In the pre-market, price was gapping down when everything else was gapping up. That's a heads up. That's a heads up for a down move when you've got a security or an index gapping down when like everything else is gapping up. So money was going into the tech, SPY and the FANG names. Okay. We had said in the beginning that 147.5. And this has been a line that goes back weeks. Bullish above, bearish below. So it gaps down. Maybe you did something up here, maybe you didn't. But let's say you didn't. When price broke below 147.5, you have to be short. You just have to be. This is the prior trading range. We had marked 147. It's been there forever. We've been trying to stay long above it and short below it. We've also had 145 on the board for weeks and weeks with a $3 gap below 145. We've had places where 145 has been tested and held every single time. So price breaks 147.50. You should be short. Okay? Short, short, short. The trade is working. Puts in a swing high. I'm going to put a stop there. Price puts in a swing high. You move your stop down. Okay? When price moved down and hit 145, it gave you 1, 2, 3, 4, 5. It gave you an hour and 15 minutes to close your short against support. Right here. It gave some looks below, but no candle closes below 145. So that was a place to take your full profits, $2.50. And if you bought weekly options, you know how much money that could be. But let's say you didn't. Okay, let's say you didn't do that. Let's say you thought it was going to break and you held tough and price reversed on you. You still had your stop. And price took you out right there at 146.25. So you made $1.50. Or excuse me, $1.25. You got in at break of 47.50 and you got out at 146.25. Price never broke above this 147.50. There was, literally no way you could have gotten long if you were here. Now, if you were here, that's what an active trader is supposed to do. Get short on a break of support, flip long at support. So you got the 250 coming and going. And that would have been, you should have been on top of the world if you caught that. $5 a travel. Break of a key level and support held at a key level. That is active trading. So I hope you got that. I hope you took advantage of it. If you didn't, study that pattern, carry it forward, sell a break of support, buy price at support. And that'll serve you well going forward. Happens all the time. Let's look at Apple. I thought this was really interesting, and a guy in the trading room caught this trade. I wasn't in it. I was daydreaming, sleeping, happy about my day. Didn't think anything was going to happen. Blah, blah, blah. Let's look at it. Price gapped higher, came back down to this 403 level. And if you go back in the Apple charts, that was a prior high. So it made sense. It did a check back move and then spent hours testing the high of the range, testing the high of the range. It came back, tested the low of the range. Maybe somebody sharp bought that on the back test. That would have made sense. Here it goes, right at the top of the range. That is a level that you could have alarmed. You know, TA 101, if price takes out the high, it's a buy. If price takes out the high, it's a buy. Right here at 2 o'clock, it took out that high and made it a buy. Doesn't matter if you're trading weekly options or swing trading, you know, Apple into next week. It broke the high to an all-time high. That makes it a buy. There were a couple guys in the trading room that bought weekly options and got this unbelievable $12 or $15 move into the close. Nobody could have seen that coming. But you never see it coming. All you can do is use your technical triggers to either get long or get short based on the price action. So the price action was bullish. Break to a high is a buy. And that's all she wrote. So I hope the candle by candle breakdown helps you. I know it can be really, really frustrating in the moment if you don't see it, or you've got a lot of moving parts. You know, you're trying to look at 4 charts, you know, all at once. It's easy to miss things. Everything is easy in hindsight. You know, perfect gap fill, down to support, flip, you know, go from short to long. I know that's not easy to do. And don't make me, it wasn't my intention to make it sound like it's super simple, because I know it's not. But if you can take those, you know, if you didn't catch those reversal points, carry that forward in your active trading. And one thing that might be helpful, if you're new at active trading or haven't had a ton of success, focus on 1 or 2 things. You know, trade SPY and QQQ, or trade QQQ and IWM, or whatever. Don't have, you know, 15 charts that you're tracking. It's so easy to get discombobulated. You know, price moves and you don't see it. Find success in 1 or 2 instruments that you can get comfortable with. Own those levels. They're so important to know where things happen. You know, support and resistance, key levels. Price reacts to those levels. So, you know, we were watching on QQQ, we were watching 259 for quite a while. That proved to be a great level. 147.5 on IWM has proven to be a great level, as has 145 on that chart. On SPY, 323 has been a great level to key off of. So just be aware of price when it comes into and reacts to these key support and resistance levels. And I think your trading will improve. If you haven't watched that how to set stops, it's been very helpful to the active traders that have watched it. I've gotten some good feedback from it. So take a look at that. I think it'll help you in your trading. Over in the show notes are links to to join our team. You'll get all my content 6 times a week. Subscribe to the YouTube channel. I look forward to sending more relevant content your way soon. This has been Chris Buss with Traders Profit Compass. I hope you liked the video. Hope it helps. Have a good week of trading.